Hey everyone, Couch Investor back on our video for today, and we have some breaking news because Enphase is down 11% after hours. SolarEdge is down 18% after hours. The stock right now looks a bit completely lost actually. It's down more than 60% since it released earnings in August. And I mean, it's back to levels not seen since 2020, and we are now extremely oversold. This is not even on the daily, this is on the weekly chart. If we now jump to Enphase, the stock is now down 45% since they last reported earnings back in late July, and it obviously broke the support line, which was around $120, and we're also back to numbers not seen since November 2020. So what exactly has happened? Well, SolarEdge released the preliminary results for the third quarter. Guess what? The numbers are much lower than expected. Now we're going to have a look at those numbers. Also, I would like to read something that happened during the day before this got released. We already had a couple of analysts downgrading those companies. So first, Scotiabank downgraded the solar stock, which was Enphase, to sector perform from sector outperform with a $140 price target, which is basically 40% higher than the price it is right now after hours. And that's a cut from $180, saying it has lost street conviction that the destocking cycle is Q3 marks the all clear for the inventory channel, pricing risk, and overall demand. It is difficult to see a path to marked and sustained improvement in the macro environment over the next 2 to 3 quarters. Earlier that week, BMO also downgraded Enphase, and for similar reasons. Then we had Richardson also cut his price target for SolarEdge Technologies to $170 from $345, while maintaining his sector perform rating, as that while the company has enjoyed growth in Europe over the past several years, the destocking cycle seems similar to the US, though lagging by a quarter or two. And the analyst top picks in cleantech are utility scales names like Array Technologies, Nextracker, while residential installers Sunnova and Sunrun are notable value plays that are oversold in the current rate-related sell-off. We talked about Array Technologies in the best stocks to buy in the month of October. If you remember, that video will probably be in the top right corner. Now, what have we been saying for a while with regards to solar? Enphase, the stock might be down, but it was for a good reason, right? All the tailwinds that it had that pushed the stock super high are basically disappearing or disappeared. And so the pressure is on the stock because you have to justify the stock price. We've seen that with Tesla as well, right? The stock was down close to 10% after they reported probably one of their weakest quarters in a while. We've talked about that. I'm going to touch on the call during the weekend summary. But with regards to solar, I mean, Tesla itself reported some numbers with regards to energy, right? If we go back to Tesla's presentation, so first of all, energy storage, this is something that they do and not a lot of players do. They outperform there by a lot. So energy storage deployment increased by 90% year over year. So that was a tremendous quarter yet again. And then solar deployment declined on a sequential and year over year basis to just 49 megawatts. We've seen that before. This is an area of the business that really right now cannot get any traction. And we know why. High interest rates. It's not the car industry, it's also solar. It's something that they've been talking about for quite a while. So I don't understand why a lot of people here are surprised by that. Now, when it comes to SolarEdge and Enphase, of course, these are the numbers before the market actually reacted negatively. So before the minus 11 and minus 19%. You can clearly see, we have seen this before when we covered Enphase, that yes, this stock valuation-wise is much cheaper than its 5-year mean. And that is normal because right now we're in a down cycle. So the stock gets hit quite a lot, but the business itself is not really improving that much currently. In the short term, I said it again and again, expect some headwinds. Just because the stock is down 60%, or yes, in this case, actually 60% year to date right now, but probably more when the market opens tomorrow. Yes, it might look cheap on paper, but there is always a reason. Sometimes there is a disconnect, but in this case, I mean, yes, it is oversold, but the market clearly is not buying the narrative yet that growth will come back in the quarter or two. Now, will interest rates go down in 2024? In my opinion, yes. I think Jerome Powell will say something positive that will signal to the market that rates have peaked and it will go down. When will that happen? I don't know, but I'm pretty certain it will happen already in the first half of 2024. We'll have to wait a couple of months before we replay this video. Now, before I go and jump into that report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, SolarEdge announces preliminary financial results. Will announce financial results for the third quarter of 2023 on Wednesday, November 1st. By the way, we are already going to get the Enphase numbers. I believe it's next week. So, stay tuned for that. So they say here, during the second part of the third quarter of 2023, we experienced substantial unexpected cancellations and push-outs of existing backlog from our European distributors. We attribute these cancellations and push-outs to higher than expected inventory in the channels and slower than expected installation rates. In particular, installation rates for the third quarter were much slower at the end of the summer and in September, where traditionally there is a rise in installation rates. And so these are the revised numbers. Third quarter revenue is now expected to be in the range of $720 to $730 million compared to the previous expectations of $880 to $920 million. So basically $200 million different between the low end and the previous higher end. GAAP gross margin is expected to be between the range 19 to 20%. Non-GAAP gross margin is expected to be within the range of 20.1 to 21.1% compared to the previous expectations of 28 to 31%. So another big hit there. GAAP operating loss is now expected to be within the range of $9 to $28 million. As for non-GAAP operating income, that's now expected to be within the range of $12 to $31 million. Previously, the number was much higher, $115 million to $135 million. So, I mean, there's no way to sugarcoat this. And to be honest, a lot of people saw this coming. So they sold already when it was $130, $150 or so. A lot of people in my comments were saying, I'll buy it below 100. And yes, maybe you'll get that chance to buy Enphase under 100 and you'll be able to buy SolarEdge maybe under $90 as well. Again, for long-term players here, yes, this might look extremely cheap. But I think right now we're in the catching knives type of phase, right? We've seen these stocks, well, both of those stocks go down already for a couple of months now, a couple of months straight. Both of them have gone down because you see the pressure not only on the stock, but you see this already in the business for quite a while. We're in a down cycle, we're in a high interest rate environment, and yes, they are in the business of things that cost a lot of money. And so if interest rates remain high, it's definitely going to hurt their business. We've seen it with Tesla, we've seen it with a lot of other companies. High interest rates is hurting such a business. Not a lot of people have that amount of money on their bank account saying, oh, okay, I have X thousands of dollars to spend now on a solar roof or on a new car, etc., etc. No, most people live paycheck to paycheck. So yes, they do need good financing options. And currently right now, that is clearly not the case. As always, I prefer companies that announce the results early so you don't get that bigger shock effect on the day itself. We've seen this in the past already with the likes of Nvidia, for example. They knew their numbers weren't going to be good. That was Nvidia before the AI hype cycle. And then Intel released their numbers and it was horrible. Stock tanked a lot. And I was like, why didn't Intel announce their results earlier? I think this is a move to do. Let's see if Enphase reports even worse results. Then I'll probably say the same thing here. Why didn't Enphase pre-announce these numbers? But hey, maybe they'll surprise us. But I don't really have my hopes up that much because, well, we know the market they're operating in. We now have indications from Tesla, from SolarEdge, Analyst as well. Things are just not looking good for these companies, despite the positive announcement that we've gone through with regards to Enphase. opening up in new markets, etc., etc. Yes, that will be great once we bottom out and growth reaccelerate. Yes, growth will probably reaccelerate faster than before. But currently, expect more pressure on the business and on the stock. There will come a time where this will just become a no-brainer, and then people will just buy it. I'm not talking about individual investors, I'm talking about institutional investors. So that would be it for this video. Of course, do share your thoughts down in the comments below, because I do know that a lot of you have those companies in your portfolio. So do share your thoughts down in the comments below. What price range are you looking at? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.